26, 2020, 2020 401k and IRA limits. Did you get a raise? This is the 39.6 Facebook and YouTube Live Finance Show, the show that teaches high earners like yourselves how to make your money work for you so you don't have to work for your money. We have general investing, taxes, real estate, syndications, Airbnb, paying for college, paying for childcare, and even the car you drive. Today's episode, did you get a raise at your job? Well, for 2021. There we go. I had to just update the number there. Okay. So the IRS every October announces their new limits for certain areas of the tax code corresponding to retirement contributions. I actually have multiple live viewers here. I think I'm broadcasting live to Kate's page. I need to close this down. 1 second. Today is our episode for Monday, October 26, 2020, episode 112 of the 39.6 show. Today we're going to discuss 2021 401k and IRA limits. Did you get a raise? All right, this is the 39.6 Facebook and YouTube Live Finance Show. This is take number 2. I'm surprised we actually have people here in the episode. It's very early this morning on Tuesday, at least in my time zone. This is a show that teaches high earners like yourselves how to make your money work for you, so you don't have to make. Oh my gosh, this is early. This is a show that teaches high earners like yourselves how to make your money work for you, so you don't have to work for your money. We talk general investing, taxes, real estate, syndications, Airbnb, paying for college, paying for childcare, and even the car you drive. All right, I had a couple of glitches here. I think I accidentally broadcast this to my wife's page for a couple of minutes and then realized it and shut it down. Okay, so every year, the IRS in October announces the new limits for retirement plans. All right, so first of all, just to knock it out, IRA limits are not changed. It's still $6,000 per year per individual and $7,000 if you are for people who are 50 plus. Okay, but they did have a change on the 401k side or 403b side, which is the 415C limit. Okay, so they have a code for every different limit. The 415C limit is the limit of total contributions to a defined contribution plan. Okay, so this went up from 57,000, which is what it is for 2020, and it's gone up to 58,000, which is what it's going to be for 2021. That is the total amount that can go into a 401k or a 403b. Along with that, they have also changed the 401A17 annual compensation limit, which is applicable to these retirement plans, and that has gone up again from previous year. What last year was 280,000. This year was 285. Next year it'll be 290,000. So that number is always 5 times the number of the 415C limit of $58,000. Because when we look at how much can go into an account, we often say, well, it's 20% of total earnings. So that's where the 20% comes from. It's that proportion between the 415C limit and the 401A17 limit. Those code numbers don't really matter. But what you need to know is it's 58,000 versus 290,000. So this is very important because a lot of people don't realize that they actually get a raise every year that this limit goes up. Okay, it's been going up about $1,000 per year. The amount that you can defer in, however, has not changed. Okay, so that limit of 19,500 is still 19,500. But the total of 57,000 went up to 58,000. So what does this mean? because the 401A17 limit has gone up from $285,000 up to $290,000, for people who make $290,000 or more and get a percentage contribution from the employer as a quote unquote match, that match is based on earnings up to, but not beyond, the 401A17 limit. So if you make $300,000 a year as your base wages for which they will match your compensation and put into the 401k or 403b, now there's an additional $5,000 of your income that is going to get that quote unquote match. So that is actually quite valuable. I mean, it's basically an inflation adjustment per se, but we might not actually have inflation for 2020 to 2021. Depends what index you're looking at. And even though there are trillions of dollars that have been poured into the system, it does not necessarily mean that prices have gone up. So technically, we don't necessarily have inflation. But this number does usually go up by about $1,000 per year. So what does that mean for you? You make $300,000 a year. Now you have an extra $5,000 that will be matched. So the question is, how much is your match? For example, for my wife, she gets 8.5% as a match to her income. So at UT Southwestern, that's standard for physicians. So if you are making more than $290,000, $5,000 of extra match compared to 2020, 5,000 times 0.085, which I can do in my head, but just to make sure, because it's so early, is $425. Not a ton of money, but that $425 is $425 for perpetuity. So the lifetime value of that bump in the 401A17 limit is fantastic. Now, I don't think that 401A17 limit has ever gone down based on like deflation, although maybe it has, and it certainly could. I know that the mileage deduction per mile, the IRS actually had gone down from, I think, 2018 to 2019, because I think maybe gas prices had gone down and the cost of car utilization had gone down. So it is possible that it could go down, but in general, it tends to stay the same and creep up a little bit per year. Some years it stays the same, and then the next year it goes up. They don't tend to increase it outside of increments of 1,000. So they're not going to increase it by like $726 based on inflation. They'll do 1,000, or they might wait the next year and then do 1,000 or something like that. Okay, so if you make $300K or more, or really $290,000 or more, and your employer pays a percentage contribution match, often called a safe harbor match, or it could be a safe harbor, like non-elective contribution, as a percentage of your wages, then you could have gotten a match. For other people, if you're getting paid profit sharing and a match, and they fill up that amount, like my employer, we take people who are partners all the way up to the full limit. This year is $57,000, but next year it'll be $58,000. So that's an extra $1,000 that your employer would give you. However, if you're in private practice, that often is just really your own money, just comes out of your earnings. But still, it puts an extra $1,000 into pre-tax money, and that would save you at the top tax bracket $370 in tax, continue having tax-free growth, as well as increase your space in qualified accounts, ERISA qualified accounts that are asset protected. So it is meaningful. And for those of you who are like sole proprietors, 1099, you now have more money you can squeeze in there. You have to make at least the $290,000 as a sole proprietor to get the full $58,000. But there you go. Can be done. If you're an S Corp, then it's probably lower. Actually, pretty sure it's going to be lower. Okay, that's it for this episode, which is really just a really late episode for Monday, October 25, or October 26, because that did not get done yesterday. Have a happy Tuesday, everybody. Again, this is only financial, non-advice, my entertainment, hopefully yours. I'm not a professional, certified anything, accountant, financial, otherwise. really only in my actual profession and really only licensed in my current state. All right. Have a good day, and hopefully I'll get to episode 113 this afternoon.